What is going on, everybody? Good morning, good afternoon, good evening. Glad to have you all together here as we go over the New York live session here together. It's about 30 minutes now into the US equity markets open. We're going to take a look at what is going on, everybody. Good morning, good afternoon, good evening. Glad to have you all together here as we all right, get rid of that little echo, 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 echo. All right, everyone. So let's take a look at what's going on. We're seeing a bit of a pullback last night. We're seeing the yen obviously very firm, some big moves. As you saw, a little bit of profit taking before the Federal Reserve meets tomorrow. All eyes are definitely now moving to tomorrow's Fed action. The question is this pullback we're seeing in the markets and across the board, is that something that's going to actually be a further retrace before perhaps resuming back towards the current strong bullish momentum trend? Or are we going to start seeing a deeper pullback that really rests tomorrow on what happens with the Fed? Now, there were reports that I read about, here they are right here. Hold on one second. Boom, 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 boom. I thought I had it. There was last night some tension between China. There was a lot of tension between China and Australia, whereas China was advising its students to no longer or to really consider hard attending any university in Australia. And it turns out Australia has been buying Japanese bonds, moving away from China. And this is definitely this is just another piece of breadcrumb that we're watching at the deteriorating situation between the US and China, and Australia is definitely picking sides, but it's all going to be about the 10-year. There's chatter that maybe the Fed will start to mention the yield curve control tomorrow. Now, this is something that I am not an expert in, and therefore need to go and look for, Danielle DiMartino Booth, who used to be an advisor to the St. Louis Fed. She's someone that I look to her Twitter feed over here to find anything going on. And I am familiar also with Chai Girl, who is a crude oil trader and analyst. And they posted something from the Wall Street Journal, said that Fed officials aren't prepared to announce any decision on so-called yield caps when their two-day meeting policy concludes. Now, this would be I think it would be the first time since World War II the Fed has actually gone ahead and controlled the yield on the 10-year here. The fact that they're talking about it in the Wall Street Journal, again, these are just some breadcrumbs, probably means no policy action will be taken tomorrow. But will it be one of the questions asked to Jay Powell during the press conference? And how the market reacts to that is what we need to be focused in on. Not so much trying to understand and then kind of foretell what the market's going to do, but for our purposes, we want to know how the market reacts to this and be on the lookout for it tomorrow. The other thing before we get into the charts is just watching over here that global cases now are 7 million. They seem to be doubling overall, I would say about every 20 days now. It's still, and over here in the US, you could see like Montana is beating the curve, and also Vermont and Hawaii and a little bit Idaho, but almost everywhere else, and most alarmingly in California and Florida here too, after they reopened, you could see now a couple of weeks later, they're back at all-time highs. California never even beat the curve. It continues to rise. So there's that. So the thing about whether or not China is selling U.S. treasuries is at the end of the day, China needs those as well. Two things are different than if China were to do that 6 months ago. Right now, they're short dollars, first of all, and we don't have any swap lines directly open to Beijing from New York. But at the other, at the other hand of the, lost my train of thought there. All right, so by the way, sorry about that. Treasuries. The other thing is that if they were to sell the treasuries, this time the Federal Reserve, which is now monetizing the debt, would just buy them. They're in the middle of doing QE anyway. They would just buy them. So it's really not something that could hurt the market. The question, I think the dollar right now, we need to talk about the dollar because the dollar is having trouble holding on to any type of gains. It looked like twice in the last 36 hours it tried to make an attack at this resistance here at 97, and both times it has been rejected, and pretty firmly. Is that because of what is hanging over the market's head regarding the 10-year and the Fed's response to it with the Fed meeting tomorrow? Probably. Will the dollar make a move sometime after the Fed meeting tomorrow? Probably. Look at the consolidation over here. This could break either way, right? Out of this consolidation, it can move up or down. Probably it's going to be tomorrow's catalyst that causes the move here on the DXY, and that should be the next move across the markets as well. Let's look over at the S&P 500. Same thing over here, right? This is just a little bit of profit taking we're seeing. And tomorrow, you're into resistance over here above you. The market has been extended. It's just normal profit taking. There's nothing else to really read into it yet at this point. It's too far to tell whether or not this is actually going to be bought up because, as we know, going back for the past few weeks, any little, look over here. Here you had 2 down price sessions in a row. Over here, you had 3 sessions in a row, but look at the move was hardly anywhere. And again, only 2. So we've only put together now 2 down sessions, which, 2 or 3 has been the norm. The downside has not really been even close to be beginning. So you got to assume that there's a chance that this is going to resume and continue up. But the catalyst, I don't think, is going to be till tomorrow. It is possible that we do continue this current momentum up until tomorrow, though. That's for sure. This move that we're currently in, although you could see on the DXY is already reversed this morning. This risk, let's call it risk off move, even though it's just more risk on profit taking, could definitely be continuing throughout the next 24 hours into tomorrow's Fed meeting. Gold, on the other hand, is nicely bid this morning, up 1%. Silver not joining in. Going ahead, you could see that technically, using the true trend, that this is started rolling over, and this is now the first pullback into the uptrend. If we come up into this resistance here and then are able to resume out of it, that might be potentially a good place to go ahead and look to short gold. Silver, however, firmly maintaining a nice upward impulse even above still the support over here at 17.62. So even though, I'm sorry, 17.4, $17.40, even though gold is up more and outperforming silver today, technically silver looks better to the long side. Technically silver definitely looks better right here. You could be actually getting ready to go ahead and take a buy here in silver as it's maintaining here above the support. And if it starts to resume out of it to the upside, silver would be the place to go look for a long. WTI is down barely, it's just still after this breakout above this pretty big resistance at 35. It's now just consolidating, and it's too soon to tell what the next move on oil would be. I'm only looking, really waiting, and I've been waiting for an opportunity to look to perhaps building a short into WTI. It looks like we're getting closer, but still no indication yet that it's time to start getting involved. Bitcoin looked like it was getting ready. Looked like last night it was getting ready, breaking out right above this resistance right here, and then quickly sold off a couple $100 pretty quickly, and then came down again, holding this support over here, holding right here above the support at 95.88, and back up into its consolidation phase. So Bitcoin's getting ready for a big move. It looks like it's going to be to the upside. It really looks like it's going to be to the upside. If it is to the downside and we get any opportunity to buy into the support down here at 84.77 and or this trend line support, those are opportunities that I'm set for already. I already have resting orders. So while I expect, it looks like that we have the potential here to break out to the upside, and not only break out to the upside, but take out the 10,400 line in the sand and set us off on the bull market phase. I'm also at the same time watching those two levels. I'm watching 84.77 and then the trend line support down here. Let's check out Ethereum as well, though. Let's check out Ethereum, just get like a little broad perspective on what's going on over here. People ask why I don't and would like me to spend more time on Bitcoin. And I think the greatest reason I don't, because this is right now the most important trade that is happening right now is Bitcoin. And the reason being is because I don't want you all trading in and out of Bitcoin. I don't think you're going to do as well as if you buy and hold. So while you will see sometimes, me taking small pieces here and there, the majority of my position is stored offline. There's no question about it, right? And I'm trying not to get you guys so involved in it. I'm trying to get you to have that bigger, longer term perspective on it. And that's why I'm always kind of conscious of Bitcoin, but not watching the price movements as we do everywhere else. It's mainly because you need to be into that holder's mindset. So that, I mean, it's difficult. I understand it's funny because I love Bitcoin so much, and why I would like to spend more time on it and talking about its movements as we did here this morning. At the same time, I feel like if people start trading Bitcoin, they're going to be selling, thinking they took some good profit. And then they're going to find out there's been a volatile move to the upside that they then have to chase to get back in. And then maybe Bitcoin finally, retraces a little there, and they take too much of a loss, and then they sell, and then Bitcoin jumps up again. And they're just, instead of accumulating more Bitcoin, they're losing their Bitcoin. And I don't want to see that happen. I want people to take advantage of this trade. All right. So, and I just have to look at where Ripple is, XRP. All right. Euro US dollars had a wild ride this morning, and there's no question about it. Right now, it looks like it is back on the move, resuming out upwards over here. You could see that it's having trouble getting below and holding below this support over here at 1.1282. Now, what makes today's analysis different, or the most important part of today's analysis is going into the session, understanding what's going on. We're seeing right now, we're seeing a risk off move, which is not necessarily risk off, but just a profit taking more or less on the big, strong momentum that we've had of risk on over the past 6 or 7 trading sessions. And that's because tomorrow the Fed is meeting. What's going to happen tomorrow after the Fed? That's going to be a catalyst, right? We're looking at levels that are pretty extended. Either they're going to continue. We're not going to consolidate out of it. I'll tell you that much. We're not going to continue the consolidation. We're going to make a leg up or down. So we'll find out where that is. Over the New York live now until it closes below this support of 1.1282. Australian dollar, US dollar. Now we're watching these for pullbacks. Here we go. The pullback has started. Again, the dollar becomes a big story tomorrow. So we're going to need to watch and follow that. But right now, we're just going to only dig in and look at the charts and over here. We still maintain a strong uptrend over here. We've now pulled back into the first support area. It's been a shallow pullback. If price resumes, taking an opportunity here could be the right play. However, hopefully our entry technique will prevent us, if this continues to come back and pull back into the Fed meeting, from taking an entry, as will time of day. That's why we use both of those two things. They're really there to protect us. The time of day of the entry, really, really important. and the fact that you first wait for the resumption upwards when looking to buy, the first indication. Now there was a couple of trades this morning that we should look at over here. It was the trying to think of the two charts shared this morning. There were some good trades, just the timing was off. And well, when I get to them, I'll pull them up for you. I think I need Google Translate for that one. All right. So, by the way, there's two pairs that I want to pull up, and I don't remember the pairs because they were shared with me. They weren't trades that I took. I think the Australian dollar, Canadian dollar is definitely one of them. And we could see right here, wait, where would the entry have been taken? Well, let's look at this anyway as a perfect test case to look at that. Right now, that you could see that clearly the trend is up. Right now, you had the first pullback into resistance, right? Now, did you first pull back into support? Over here, as price resumed up, this is the first possibility to possibly enter the trade, right? There was another perhaps signal over here. I don't think the pullback was very strong, but that could be an indication that price is really going to continue up, especially when it's moving with this type of momentum. So the question is where do you put your stop loss? And someone entering, for example, the trade right here on this price bar as it makes a higher high, this price bar here on the 7th of June. Now, they normally put their stop like right here, right below the last move over there, which is a really tight stop loss. And it's really going to bring down the win percentage because you'll be taking a lot more stops. If you are a little bit more liberal with your stop loss, putting it even at a safe spot, look down over here past, this is 1-2 swing lows ago. And you could see that it's protected by this area of resistance. Like if price comes over and hits this, then you're really wrong, right? Now, what about your risk to reward? If you're risking, say, 0.5% from this move to this move on the upside, that means you need a pretty big move to make some good profit. There's no question about that, right? So, but what helps is that the fact is as soon as this trade starts going into profit and you move that stop loss to break even, you've already improved your overall risk to reward. You could get better. You could get better at knowing where to put your stop loss and keeping it tight, yet giving it room. But before you're able to make that adjustment and make that move, first, instead of being worried about making all the profit that you could potentially make on the upside, be worried about giving yourself more the opportunity to stay with the trade, to stay with the trend, and the opportunity to actually take some profit. Then you could get better at moving and discerning where your stop loss should be, giving yourself actually the further improvement to improve your profitability. You know, Mario, the global dollar shortage is not in play right now, so it's not. We don't need to talk about that, right? We were talking about that as it was happening, which was the prelude to the crisis. But going back into February, that was, you know, a topic of discussion. Right now, that's not really in play. And if they do cap the 10-year, which it looks like, if you read between the lines, this piece in the Wall Street Journal that says that the Fed is not prepared to announce any decision. So you have to think like double speak, right? The fact that they're making an announcement in the Wall Street Journal talking about it means that they're getting ready to do it. And even though it's not going to be tomorrow is when they're introducing the possibility of doing it, preparing the way to do it. So that could that weaken the dollar for an extended period of time? That's what we need to find out what the Fed does. We need to find out what the conversation is tomorrow. And I need to learn from those who know more than I do, right? And read as much information I can about it and then discern what it is. But this is something that could potentially weaken the dollar for an extended period of time. That's more important than dollar shortages right now. All right, let's keep going over here. I want to look at some interesting pairs. I want to look at the US dollar, Japanese yen. The US dollar, Japanese yen, we've been watching because it was flirting right over here with making this breakout, which it did against this 5-year trend line. and then was rejected by our line in the sand and is now pulled back into an area where you could see which was the top of the resistance from the last 6 weeks, right, of when it was consolidating. And now all of a sudden it's back into there as support. The dollar, this could be a potentially good place here to build back a long position into the US dollar, Japanese yen, if price starts resuming up, giving you the first indication that it's now resuming and the opportunity to get long over here. What else is interesting this morning? We have the New Zealand dollar, Japanese yen, right? The New Zealand dollar, Japanese yen has, after taking out this big resistance, has come up into the next area and been rejected hard. Now look at this extended move up. This was overbought, remaining overbought for an extended period of time. This seems like a normal retrace. That retrace is now, you could see where this heavy big resistance was. This is now support, right? So what happens next? You know, is this an opportunity here to also get long if price is then able to hold and resume upward? It's something definitely to consider, something that's definitely in play. If we lose this support, there's no question we could, and what that means, we're seeing a much more pronounced risk on environment. It's going to become clearer. Today, it's more profit taking, right? But if we start losing this support over here, it should be marked as support right now. At that point, then we could see a pretty big or steep decline over there. New Zealand dollar, US dollar, you could see the dollar is having a little bit of issues. New Zealand dollar, very weak today. US dollar is not able to take the advantage like the Japanese yen and Swiss franc are, who are up more than 1.5% against the New Zealand dollar. Yeah, I definitely will take a look at that next. Pound Japanese yen. I'm trying to focus in on the charts, not on the chat. So what about a play over here? Is this opening up perhaps now that you're seeing a pullback along, right? This was a nice rejection over here, by the way. Look at that. This was the heavy support on the downside. It has now been rejected here as resistance. Or so what's the play? I think, well, really it is to really just observe what's going on today. Take a look at these moves. See if there's any potential opportunity, because the market looks like it's going to be moving for the next 24 hours into the Fed. Normally what you see the 24 hours going to the Fed is lower volatility, especially during the Asian and London session. So that remains to be seen what tonight is going to look like, whether or not we are going to see that low volatility that then goes all the way into the meeting, or are we going to see this current trend that we're seeing continue a slow grind into the meeting. That's really what we're watching over here. US dollar, Mexican peso making a big gain over here. And you can see now is look like it's trying to get back above this trend line. If it gets back above this trend line over here, then's the opportunity here looking for perhaps longs. Same thing on the US dollar, Canadian dollar. It is also on the verge of making it back up. We're at a really important point. This is a great position to be because we were going to see some big moves in either direction, and it's a good time to get involved. Small caps are on fire. Wow. Small caps are on fire. Wow, congratulations, to people. I for me personally, and it's so funny being on YouTube because people are weird. But anyone who thinks that this portion of the trade over here was easy is, not for the experts. It wasn't, that's for sure, right? And now this seems to be total euphoric coming in, looking at taking out this little bit of resistance over here, which will that'll take out some stop losses and then put it right into strong resistance. So it's not looking so good here, the Russell 2000. Yeah, so I'm not focused on the CPI report myself either, but we're in a deflationary type environment. It's as clear as day that QE causes deflation. I know, almost all of us thought that potentially was going to cause inflation. And although we've seen for sure it has caused inflation in food prices, in healthcare, in rents, and in certain assets, right? In the equity markets, most pronounced. And but overall we're in a deflationary type environment right now. I don't think that the market it's going to be a long while before we see, I believe, the inflationary type kick. I really believe that. We'll see. I mean, that's the puzzle right there. When does the inflation happen? It's not a question of if the inflation or hyperinflation is going to happen. It's just a question of when. And it seems to me that the current trajectory that we've ever seen, it's been on since 2008, the last 12 years, means that it means further deflation for some time to come. Maybe it'll be around the time that, they start monetizing everything, MMT. And that's a while coming, I think. But until, people aren't paying taxes because, well, then people need to pay taxes for MMT. That's kind of how it works. Well, we'll see what happens. Biggest FOMO ever. This market environment is a lot like back from what I've read about right before I started trading in 1999, when everyone was riding that market wave up. Who was it? This guy was on Shark Tank. His name is Chris something or other. He always wears like the Texas outfit. Big investor in a lot of Silicon Valley companies. I think he made his money on Uber, most of it at least. He's been involved in a lot of companies. He had turned like something like a small amount of money into, I believe it was more than $5 million or $7 million trading stocks, and while he was in college, and then actually went into like debt $3 million in a short time. And that's how it was back then. People were laughing at the professionals because it didn't make any sense to the professionals. It didn't make any sense. And anyone who thinks that this was easy they just, when someone makes that type of a comment, like, oh, you should have been buying and holding and you should have known this move was happening. Well, they're showing that they are very inexperienced, because that's not how our professional thinks about that at all. So, what happens from here? Well, we all know how far insanity could go, and we'll see how far this insanity goes, but that's still what it is. And eventually the markets will be efficient. Right now in the S&P though, today, this is, remaining to look for possible signs of trends resuming upwards, and a place to go ahead and get back with this trend, which still is upwards. And it's strong, and whether or not it's turning over here, there's no indication that we're seeing any type of turn in the market yet at this point. Tomorrow's Fed meeting will give us a much bigger clue. Let's take a look at some Canadian dollar pairs. Also, the Canadian dollar, US dollar we looked at. This was a place perhaps now, if we get back above this trend line, and this is now resistance right above us, that might open up the opportunity to start looking for some buys. What about the Canadian dollar, Japanese yen? This is now pulled back into an area of what is now support. Is that the time to be looking to going long the Canadian dollar versus the Japanese yen, or are there other better pairs that you'd rather focus on, right? That's the question. So let's take a look at the Australian dollar, Japanese yen, which is down 1.65% today. And it looks like it's taking another run at this support down over here. Is that a better opportunity to play to the long side if this is able to go ahead and resume out of this pullback? You could see that, again, once you reach these overbought readings, this is usually when markets turn. This could be the turning of the market, but we'll wait a little longer for more confirmation of that. Right now, this could also lead to a big move to the upside, as when you get these oscillating readings that are so overbought, they could really push price and extend that way. That's not necessarily a time to be looking to fade them, but most of the time to trade with them. Yeah, so we spoke about gold and silver. If you missed that, Ronan, you could just pull back on the stream and go to the beginning. We spoke about gold and silver in the very beginning. Definitely right now, technically, even though gold is leading on the way up today, technically silver looks healthier. And any breakout in the precious metals, I think silver might be actually the play. I know for a long time, I've thought that the gold to silver ratio is going to continue in gold's favor, because of the fact that we are seeing sovereign nations and central banks buying gold. I believe that's why this time you're seeing the gold to silver ratio at such extended levels. But that could continue. That could continue. But right now, silver definitely, why it's maintaining above this support and consolidating above the last leg, that looks healthier than gold right now, which is actually, you could see the true trend is negative, showing a possible bearish impulse here. As you're coming back into this first area of resistance, this is where you're looking, if you're looking to trade gold and you see it come off that resistance, looking to get short. So is it possible you get above this resistance here at 1723? If you do, if you get above the resistance, right? As soon as you get above the resistance, the true trend will have turned green regardless, but you don't follow that price up. You wait for it to come back, pull back, and then that's when you look to take the gold trade. So gold is lagging a little bit right now, but setting up for both sides right over there at an important level. Again, we looked at WTI already. Really, this is not the play. You can see right now that silver is in play to the long side, right? This is a pullback in the uptrend. Silver is maintaining its bullish technical bias across the board. So that looks good to the upside. WTI, it doesn't really look that attractive. It's in this slow grind upwards, and that could continue. However, it doesn't look like where the greatest trade or potential is for our opportunity. Perhaps, though, as it gets closer to this resistance up here at $45, and then when we start seeing it roll over and the true trend turn negative, that might be the time to attack gold for a bigger move to the downside. Bitcoin we discussed this morning, and so I'm on the verge. Anytime I discuss Bitcoin, I really, again, this is the trade that you want to be involved in over the next 18 months. We'll continue to look at the red dots that are just starting to print now. This is, again, as the bull market phase is beginning, now is the time to be continuing to accumulate Bitcoin all through the red dots, right? Through the end of this year, December 2020. And then you want to be holding and then looking to take profits. That's when we'll be talking about that. And that's when the conversation will change, when it's time for it to change and for us to be talking about where potentially looking to get out of Bitcoin. Right now, it's accumulate all through the next 6 months. And then it will also be accumulate on 30% drawdowns. That's the plan on Bitcoin. Pound Japanese yen, let's see, this is also pulled back into some nice support over here right now. It's a question of, this is the thing about when waves of setups come in, and you can see across the board, we're seeing a huge set of waves, many sets of waves. And then you have to really figure out then, you're not going to take the pound Japanese yen, the Australian dollar Japanese yen, the US dollar Japanese yen, and the New Zealand dollar Japanese yen trade all long. That's way too much risk. It's just increasing your risk over and over again. So what you need to do is pick out, as you see these multiple setups, which pair you believe is offering the best opportunity. And that will depend on what the next move of the market is. If this current risk on environment continues, then the Australian dollar, Japanese yen is the place where that I want to be involved on the upside, right? Or the New Zealand dollar, Japanese yen as well. That could also provide some opportunity. The US dollar, Japanese yen, is that the one that I want to get involved in over here? Could be. It's a very difficult, as the markets always are, with knowing what's going to happen tomorrow and how the FOMC and the market is going to react to the Fed not prepared to announce any decision on capping yield curves. Again, it's probably a good thing to do, or something that they're going to do it, and it's a question of how it's going to affect the dollar. That's the most important thing happening in the markets. This is the type of thing that could cause a trend, a lasting long trend. Want to be on the right side of it. So US dollar, Japanese yen, that could be a good trade if that's going to lead to further strengthening of the dollar. Maybe the markets think that the Fed is, maybe Jerome is adamant that the Fed is not going to do that, just like they are about negative rates. But eventually they're going to probably have negative rates. Eventually they're going to cap the yield curve. We'll watch what happens going into it. Let's see what else we could look at. New Zealand dollar, Swiss franc. We're seeing the same pullbacks across the board over here. And the question on everyone's mind is this just a pause? You have the Fed meeting tomorrow. Was this just some profit taking? And is the market going to keep doing what it's doing? And what the market's been doing has been humming along, right? Pullbacks have been steep and short, and the follow through afterwards has been pretty strong. Or is this the top now, where we're going to see, as we're extended on these levels, maybe perhaps over the next several sessions, a trend change? We don't know yet. Australian dollar, US dollar, again, to the upside over here. If we're going to see that dollar weakness, then the Australian dollar looks very attractive over here. And that's the question. You could see the dollar has been strongly rejected again at this resistance over here. It continues to consolidate. Is it going to break? This is the hardest thing before a Fed. If this thing were to break to the upside or downside, but break out before the Fed meeting, then you feel like you don't want to chase it all the way, to the meeting, and then maybe the meeting confirms the move, and then all of a sudden you get like a 2 support resistance move, a big 2-level move, and you're not involved in it. That's tough. So, I mean, Jordan, if that's the case, then soon they're going to have to talk about, the conversation will have to become, when do they start removing all of that excess of liquidity they pumped into the markets? And what's going to happen when the Fed starts removing it? It took last time 10 years for the Fed to start quantitative tightening. And as soon as they did, it didn't last too long, and it caused them to have to go full back in, right? So I can't imagine the conversation at this point could shift to any form of possible tightening or taking away. We've all decided that this is QE forever, right? That they're not going to be able to ever take it away this time, right? So that's probably what the market already is focused in on. Rudy, the true trend, you could just go up to over here on indicators, and you could go search true trend, and it'll show up, and then you could just add it. But it's the CCI using a 70 period, which gives the trend CCI readings, and then it's another CCI overlaid using a 3 period, which is the entry CCI over here, the blue one, and that helps know when near-term price is overbought against the downtrend, giving a good opportunity to get short again and to prevent you from chasing after momentum. Nice. Love my short and hurts. Oh, it was halted now. So this thing could go back down to 20 cents or so, right? As it normally does in bankruptcy. Anyone who's short over here, man, get on you. By the way, that what happened going back in January into February was, keep that and print that in your mind and print that in, because we were able to see what was going on in Twitter in China in January, and we saw how bad the situation was. And we were able to see what was coming well before the markets did. Now, remember, next time, travel and tourism industry, cruise ships, things like that. All right, let's keep going over here. So the dollar is definitely very fragile right now. Wondering if tomorrow's FOMC could further weaken the dollar. The dollar is tried. It's made 2 attempts to go ahead and make a move during that risk on atmosphere where the Japanese yen and Swiss franc definitely have benefited from, but not the US dollar. US dollar is on the back foot under pressure. I mean, so, Robinhood traders are all a different sort. When we talk about Robinhood traders, what we mean are, the people who are all in on Hertz and are the, Carnival cruise ship. That's really what we're talking about. We're not talking about the investors that use Robinhood, obviously. But yeah, I mean, the thing is that even, I think it's pretty small sums of money. People go all in on those bets, right? And they're kind of doing it like lotto tickets, like gambling. Maybe this kid has $1,000 to his name and he goes all in buying Hertz. And maybe it's not just him. Maybe there's like, a couple of thousand other kids like him who are all doing the same thing. And I think that's kind of what's happening over in Robinhood. And that's going to end badly for all of them, right? That's going to end badly for all. There's one thing being on the correct side of a trade. There's a difference when it's all luck. All right, so what we got going on here? Let me check in with all of you. We've been streaming now for about 45 minutes. S&Ps are kind of settling in over here off their lows. We're definitely seeing some profit taking for the FOMC. We're seeing gold up today, although while outpacing and leading silver looks like the better possible long entry over here than gold. Bitcoin also looking pretty good. It looks like it's getting ready to break out here to the upside, perhaps even breaking out of the resistance at 10,400, setting off the bull market. If it does not make it above this level over here, above, well, the whole number 10,000 really. It's got to make it above 10,000 to have that opportunity at pushing up. If it doesn't, it definitely looks like that we might see a fills back down around the support at 8,477, or that area, I should say. That should be up to 85, or the trend line support. So still hoping to get lower fills on Bitcoin. Either way, I'm just going to be regularly accumulating over the next 6 months. Euro US dollar has made a nice strong move off of the support, which it has held. There's nothing else to say but the power of that. Something's going on with the dollar. You could sense it, right? Notice how the Swiss franc and the Japanese yen today are making those strong moves on this risk off day. And the dollar definitely was there earlier, but it has all been retraced. People are using that as an opportunity to sell dollars. So I believe palladium is the most scarce resource, or I should say most scarce precious metal. Is that true? Yeah, the question is, does this move? The question is this all ties into tomorrow's FOMC. This is what is happening, and there's no way to know. Tomorrow, when the press conference ends and they turn off the mic, the way that we're moving then is going to be the direction, right? Is this perhaps getting in early for what's going to be that direction? Maybe. There's no way of knowing, right? But either way, by the time that press conference ends tomorrow, the way that the dollar is moving, that's going to be the trend. All right, what else to look at this morning? We're just seeing the same exact pullback across all markets, right? Look at this. You can't even get a pullback. You can't even get a pullback. Which leads me to believe that when we do see the pullback, right? When the pullback finally comes, we're going to see a decent move back down. It's going to be a question of, how far that goes. 30 times rarer than gold. Wow. Wow. Euro's really pushing. DXY is definitely under attack. Again, you have to question how much past the next hour could this current move go. And I'm inclined to think that, with the FOMC meeting, with London coming to a close, there's a good chance things stabilize across the markets right now. Yeah, US dollar, Japanese yen is coming down into some support. You could see this is the area that we were looking at, the resistance we were looking at as we built out that base from the middle of April all the way through where it broke out at the beginning of June. So it's now back into that area of support over here. But again, the way you protect yourself is by not taking an entry until the price starts trading in that direction by at least making a higher high than the previous price bar. That will keep you out of getting into a trade too early. And that will be the first thing you could automatically do to increase your overall win percentage. Yeah, Luciano, that's a great observation, saying that the NASDAQ is back in historic highs, while the Dow and S&P make lower highs. What does that mean? Well, that's a signal that things are not as healthy as they look. You could see that over here on the S&P, you could see that we are well off the high. And now everyone over here is, saying that we're going to make new all-time highs. And maybe that's the case. And maybe we do even see 4,000 before this thing becomes toast. All that's possible. All that is possible, and it's impossible to make a prediction. But right now, looking at what's going on and seeing here the NASDAQ making new highs, and then seeing the Dow and the S&P lag it. So that's not a good sign. You want to see all three indices making new highs together. This is a lot, right? Gold coming into resistance right now. Too soon here to be thinking about getting long. To get long, you would need to break the resistance and then wait for the first pullback. But right now, you have the entry CCI very, very overbought. And again, maybe still has enough juice to trade up. Even another, perhaps $25 over here. But buying in over here, that move has happened off of the support down over here. That move has happened off of the 1670 support. That's the support I was avoiding. I was waiting for a deeper pullback, right? I avoided this support at 1670, wasn't looking to buy off of it. That was the trade, not now. Now is not the trade. I'm not looking to short the S&P right now. I'm not looking to short it. So I don't have an entry. I'm standing aside right here on the S&P, waiting for the next opportunity. But I'm not looking to short it. Definitely the story today is the dollar and what is happening. It's not a big, you're right. It's not a big pullback. Equities are well, off the lows. We could say that. It's just a really big story tomorrow. I'm really interested to what tomorrow's press conference looks like. I'm more interested in what the end result will be. So that's what I'm really interested in. For anyone not following Danielle DiMartino Booth, you should definitely follow her. Here's her link on Twitter. So again, going back to the calendar over here, this, by the way, on Friday, this has the possibility to also turn the market. It's not the market sometimes uses this on a Friday after 10 o'clock as a reason to put in highs or lows. So just be aware of that. But this is really the big thing that's going on tomorrow. It's the press conference, FOMC statement at 2 o'clock p.m. Press conference is 30 minutes later. It's the press conference that is going to lead to the next move. I think it's going to be pretty volatile. I think a question is going to come up about the 10-year and the Fed capping rates. I think that it's planted. We'll see what Powell's response is, and then more importantly, we'll see how the market reacts off of it, and that should give us a clue whether or not we're going to be seeing a weaker dollar, or perhaps even a bigger pullback here, and maybe regaining back into this area over here, this trend line, which is now going to act as resistance, along with the resistance, the big one at 98.30. The really big one now will be 98.85. We'll see tomorrow. We'll see tomorrow. Same thing, a pullback on the Australian dollar has been very, very shallow. US dollar, you could see the yen is definitely stronger off the lows, but this is pulled back into some pretty decent support over here. He's still in an uptrend. There's the possibility why this move could still be winding down. It doesn't mean that this is the first impulse to the downside is the move ending, right? So it just means that we could actually see a big move back to the upside, and this could continue an area where this rolls over. Yeah, I have a close friend, Tips, also, who is heavily invested into Palladium. It's done really well also. Watching silver come off today. Look, it looks pretty good. There's no question about it. There's no question about it. I would be interested to know about how the Fed or the market beginning to price in the 10 years being capped, how precious metals should react off of that. And that's probably something that I'll be reading up on more today. This is the most important thing going on in the markets right now. It's something that could lead to a possible lasting trend, especially on the dollar. Really interesting to see today. You can see the dollar, by the way, which is down across the board. The dollar is not down across the board. Is it just the euro? DXY is down, right? Euro is making big gains against the dollar, but the dollar is making gains versus the New Zealand dollar and the Australian dollar. That's interesting, and huge gains versus the Mexican peso. So that's really interesting that we're seeing the dollar mix. The dollar is up versus all commodity currencies, including the Canadian dollar. At the same time, it is down pretty strongly versus the euro, and it's making, and the yen. Only the euro and the yen. It's also making gains against the pound. So that's interesting. It's really interesting to see. I am kind of interested in what it's been doing in the last 12 hours, 24 hours against the Asian currencies. Euro Canadian dollar. Let's take a look at it. Euro is beastly strong right now today on this session. I wonder why. I wonder why. Japanese yen, I could understand outperforming the dollar. The only other pair outperforming the dollar is the euro. Yeah, S&P is definitely at levels where, you know, you have to be cautious for a while on the S&P, right? This whole move. So that hasn't changed. The New Zealand dollar sold off today because it's beating the COVID, because they ended their social distancing. Someone knows more than we do. That's, yeah, right. What's going on with the euro? That's the thing we need to really be focused in on over here. Look at this. Let's check out Forex Live. Nothing about the euro that's specific. Interesting move then. No news that is really warrants the appreciation we're seeing in the euro today. Interesting move that's happening. What will trigger me to short the market? Well, I'm not going to short the market into the FOMC meeting tomorrow. That sounds a little bit like gambling. Just shorting the market over here in this strong uptrend with the FOMC meeting tomorrow. So until I have a better understanding what's going on tomorrow with the FOMC and the market's reaction, I'm not really looking to put my money to work right now. So that's what I'm doing over here. I'm focusing in on what the next big move is going to be over here. Yeah. So New Zealand did end social distancing yesterday. I don't think the New Zealand dollar is selling off because of that. It would seem to be that it would be appreciating because of that. So I think it's more of actually a risk off move that you're seeing because of the tensions between Australia and China. Yeah, Dave, I'll just be watching it. I'm going to be watching it live. Listen, if it was an interest rate statement change, you would see some sharp moves in the dollar. It might be trading something like the euro US dollar on the 1 minute time frame. But that's not what the game plan for tomorrow is. I'm just going to kind of be watching it. I'll probably be, I'll be watching it here on the 8 hour, and then I'll also probably be watching it on the 30-minute. I'm going to, more importantly, instead of watching the price, what I need to do is watch what the trend is after the initial statement. I know that before the press conference starts, about 10 minutes before the press conference starts, the price will retrace a little bit. Then we'll see what happens. It usually resumes back as the press conference starts and then gets pretty volatile going into the press conference. I know that after the press conference ends, the way that the market is trending, that probably I have a high chance of getting a further extension of that move. Pound Australian dollar. Pound Australian dollar looks like it is pulling back into an opportunity over here as you're coming now overbought in this downtrend, not really moving up that high. The Australian dollar is off, but not off so much, right? You're looking for the for the trend to continue to the downside above this strong resistance over here. But is that the trade you want to take, right? The Australian dollar looks to be in play versus the Japanese yen, versus the Australian dollar, versus the US dollar, versus the euro, and also the pound. So it's a question of where you want to, which trade you want to take. Look at the euro Australian dollar. So glad I took profits yesterday. Now looking at this up 1.4% into some resistance though. Euro is strong today. Why is the euro strong? Is that going to continue? If it's not, and we go back to seeing risk off, this looks like a great opportunity here on the euro Australian dollar. Euro Japanese yen. Let's first get a bigger perspective here. See where we've been rejected, come off really hard. Today you're looking at a strong euro, but the Japanese yen is still stronger. That's telling. That's telling over here. So what happens if we can't get above this resistance here? And what happens if we're rejected by this resistance? Is that an opportunity to get short, or are you looking to actually buy right now off of this support as you pull back steeply into this area, which was a big level? You pulled back into it, it's held, resuming upwards now. Are you taking long? Euro Japanese yen definitely in play over here, and potentially to both sides. Euro also making a big move here versus the New Zealand dollar. So the question is this euro move going to be lasting, and where is it coming from and why? I did read Ready Steady that European equities got really torn up. Canadian dollar, Japanese yen. Let's take a look at it. Yeah, Canadian dollar, Japanese yen is very similar to the euro, Japanese yen. And so what's interesting is obviously this looks weaker than the euro, Japanese yen, right? The question is whether or not you buy the euro move or not. I guess that's the question. Because if you think that the euro is not going to be able to hold these levels, then today's price action gives you an opportunity. It's tough. Let's check it out. DXY is off the lows, but barely. Still under a lot of pressure. Let's check out the US dollar, Japanese yen. So the US dollar, Japanese yen is actually pulled back into support, right? Again, we don't know what tomorrow's FOMC meeting is. Looks like it's going to be a big meeting with a big clue to what's next. Right? I think the dollar is definitely and the euro are trading off of that today. If the US is going to cap rates, that's going to further weaken the US dollar. That's kind of being priced in today. The question is, if they're talking about it and preparing it to be introduced, how soon are they going to introduce it? Right? Will this move that happened today be faded tomorrow? Will we see the US dollar start appreciating, coming off this support over here? It's still in an upward impulse. It's pulled back into an area of support. This could definitely be a good place to look for a long entry. If this is rolling over, right, we have the true trend possibly turning negative over here, and we get below this support, does that then become an opportunity? Are we going to see further dollar weakness after tomorrow's FOMC? And if so, then is it the time to get long the Japanese yen versus the US dollar? Another interesting question. It looks like the Japanese yen and the euro will benefit the most at the point when the US does cap its rates. That's what it looks like the market is piecing in together, that the trade, if and when the US caps its 10-year, is going to be long Japanese yen and euro versus the dollar. Now, the question is what is said tomorrow and how the market interprets that. So until we see that, taking a position is a little risky. Yeah, I mean, that's long lost plus. What could happen tomorrow is they're like, listen, we're not capping the 10-year rate, and we have no plans right now to cap the 10-year, right? So it was introduced, right? Because the Fed introduced it. They said they are not, no one asked them, are they prepared to announce any rate decision? And if someone asked them, it's not like the Fed answers questions anyway. They're the ones who are planting this. They're the ones talking about it. If they come out tomorrow, though, and they're like, we have no plans to cap rates, then the dollar is going to resume, and the dollar is definitely going to appreciate for the near term, right? So that will be a clear trade tomorrow. Tomorrow's a big day. June 12th, thanks. That's why we're here together to work it all out, to work through our day, and to figure out what is going to be the best way to position ourselves. Could you enter these trades prematurely just on technicals alone? Yeah, you absolutely can. You absolutely can. The euro US dollar, it's, I mean, let's just look at that chart really quick. Because you can see over here, after you saw this wick down and then it not hold, right? As you started making higher highs this morning, that was a clear signal. You could see that playing out on gold a couple of weeks ago, a few weeks ago. Let me show you. Why can't I spot it very easily? It was down over here. It was down over here. We saw this long wick down. This was during the New York session. And then, I can't say for sure that was it. I'm going to let it go since I'm not positive. David, thanks for being here. Thanks for being here, sharing this with us. When is the second coming of Christ coming? Well, that's still not coming yet for a while. That's for sure, right? There's a lot of things we need to see happen first. One of those would be those whose hearts were made hard to come back into reverence with the Lord. Euro spiking on space. What is that, Kips? Kips, do you have any titles that I could Google real quick? I'm not aware of what's going on with Spain and Italy. Does that have to do with the COVID cases? So Casey, this is a question that I would first want to read to everyone and then talk about. By the way, if anyone has enjoyed this session, which I have strongly, go ahead and hit that like button just to let me know that you are appreciating what's being shared here with you. And if you didn't enjoy it or you're not having fun, then, obviously this is not for you. Does Powell's intent to inject more liquidity trigger the BTC bull market? So it's a really good question. And I'm going to read it two ways. So I'm going to read it first literally, and then I'm going to go to kind of where I think it was getting at. So does Powell intend to inject more liquidity trigger the BTC bull market? I don't know if Powell is intended on injecting more liquidity or not. It looks to me that the Fed purchases are slowing down and are now down to about $4 billion a day. The question is where it goes from here. Do they continue like we just went from like 60, 70 billion a day. And then 6 weeks later down to $4 billion a day. It's still a lot of money, but it's significantly less. And the trend for that is going downwards. They're actually removing liquidity. In a sense, they're adding more, but not as much as they were. So what's the next move for the Fed? Are they going to, they're not going to take it away. They can't take it away, right? We already spoke about that. The last time they tried to take it away was 10 years after the first QE started, and they took it away. It caused this next crisis. So they're not going to take it away, but they could continue to lessen the amount of QE that they're implementing every day. Is that going to affect the Bitcoin bull market? I believe the Bitcoin bull market would have happened regardless of what was happening over here in Finance 1.0. But the fact that the Fed has lowered interest rates and has expanded its balance sheet, I mean, that's the type of environment Bitcoin was built for. And I do believe that is going to continue to add some jet fuel, as it will gold. And it doesn't mean that why Bitcoin's ready to go bull here. It remains to be seen whether or not precious metals join in this beginning leg here now, or they have some further downside. That's really going to be dependent on what happens with the dollar, and specifically what happens with the dollar starting tomorrow, right? If we start seeing the dollar bid and it's not coming from risk off type tensions, you might see gold come off a little bit. If we see the dollar really start to trend weaker from here, like the start of a new big trend because of what happens tomorrow, then at that point we could see gold actually break out to new highs and really start its next leg of its bull market that it really is in ever since back when it was trading around $11,700, $1,200. US dollar, Swiss franc. Yeah, Swiss franc is definitely having its way with the dollar. So it's also, I'm sorry, that's a great suggestion. So it's not only the euro, it's the Swiss franc and Japanese yen. And actually, the Swiss franc is up 70% against the dollar. That's a significant move, and that's greater than the Japanese yen. So that is really interesting. You pay a big negative interest rates here if you're looking to buy and hold this for an extended period of time. Pips always, pips the unit of measurement, each tick, definitely always is what you need to focus in on and not the swamp. But nevertheless, by holding this short position, you do pay a significant swamp. And if you're holding that for an extended period of time, that definitely weighs on the trade. Would I sell gold today? I would only sell gold if gold is rejected here by this resistance and starts trading down. Yeah. So if I was looking to swing trade right now, I would not be looking to go long on gold. I'd be looking to short gold into this resistance over here if it resumed down during an available trading time. Otherwise, by available, I mean a time frame that I would trade. If it broke off here to the upside over here, then on the first pullback and resumption upwards, I would go long. That's about it, though. Yeah, and I've seen that correlation. When I first started getting involved in the foreign exchange markets, which was 17 years ago, the euro, US dollar, and US dollar Swiss franc almost had a correlation, inverse correlation of complete match. I think why they still are correlated, that the negative interest rates have definitely changed that behavior a little bit. I'm not familiar with SSRM, Jane. Could a US dollar, a weakening of the dollar, encourage exports for US companies, since Trump is focusing on doing everything in the US? I don't, when the US moves its supply chains out of China, they'll be moving them to other countries, not back into the US. So, the US trade is not really so much in goods. It is more in technology. And of course, you could talk about Boeing and, whether it's military weapons or, aircraft. That's kind of where the US trade is really focused in on. So, but a weakening dollar helps the system continue. A weakening dollar helps the music play longer here right now. That's the Fed. A weaker dollar would help them out a lot and give them much more time. Yeah, there's no question that would definitely add some rocket fuel to Bitcoin. A weak dollar or a weakening dollar, that would really help not only Bitcoin but also gold. There's no question about that. June 12th, 1776. One of actually the first red pill I ever took was the monster from Jekyll Island. And it's true, that's the first red pill I ever took, and that is what began the giant exploration down the rabbit hole. $17.23. I'm not looking to short gold right now. Let's check out what the S&P is down, making its lows again, coming back towards its lows. Dollar still under pressure. Again, that's coming from the Swiss franc, Japanese yen, and also the euro. Dollar up versus commodity currencies. We're at an inflection point. This is a great place to be. I really feel like we're going to be seeing an extended trend developing here. This is kind of fun. The first red pill. What, I don't know. I think they're having trouble making sales. Airlines aren't doing so good. Let's take a look at the pound Canadian dollar. Pound Canadian dollar at an interesting place here where we could see right now this move into resistance. If it's faded, this could be the start of the next move down. Or if we get back above this, and this is resistance here, I should clean this up. If we get back above this resistance, right? Do you see the impulse changing here on the 2 trend? You're above a resistance level. If you go ahead and firm that into support, ticking along over there makes sense. I like when different pairs are at points where they could be going long or short. I really like when the market develops like that. And that's where we are right now. Check out the US dollar, Canadian dollar. Getting ready. Dollar really making some progress first. The peso then, that could mean we're going to see some further losses here. So the question is, though, like, it's a legitimate question. When would I, it's a good question. When would I think about shorting the S&P right here, right? I tried shorting it over here, right? As we came into this resistance over here, this upper, we were in this channel. That's the lower trend line support. This was the upper resistance, right? And yeah, so I tried shorting it over here a couple of times off this resistance. And those trades never followed through. So how come I'm not shorting it up here and here? Well, because once we left this channel, as we broke out from it over here, then no longer was I trying to short this thing. So I'm not ready to jump in short right over here, although you could see it's kind of nice. You're into some nice resistance over here. Follow the mouse. Let me get rid of those yellow lines. You see some nice resistance, but there's a lot of healthy momentum going on in the equity markets right now. There's no sign of them yet breaking down. I'm not looking for a short right now. I'm still looking to go ahead and to be able to buy any resumptions off of any retraces on the markets. Now that's going to change eventually. I do think there's going to come a time when this rolls over, and then it looks like now's the time to short. Look at this, even this pullback over here. That's something that you want to be involved, if possible, to the short side. Do I think that's happening right now where that's beginning? Well, it's too soon to tell. This still looks really, really bullish over here. There's no indication yet to begin looking to take any type of sells, not just yet. So we'll be monitoring that and talking about it, but just not yet. There's no place yet to look for a sell on the S&P. Yeah, I mean, it's tough to even consider it, by all definitions, a bear market, which generally speaking lasts at least a couple of months. Is the US dollar index correlated to the S&P? It seems to be more correlated right now than it was going back just a couple of months ago. We were looking at the beginning of the year, though. We were looking at the US dollar, right? Back in, where are we going? The beginning of the year, you saw the dollar firm up the first couple of months all the way to 100. And during this time, the S&P was also trading at all-time highs. So it's kind of hard to put any type of long-term correlation on the dollar right now, on the dollar and the S&P 500. If you go back to February, they were both, dollar trading at 100, S&P at new all-time highs. Over here, though, in this space, we've been seeing the S&P and the DXY very tightly correlated of late. I don't know how long that lasts for. Matta Adams, that's the little boy. We got one boy. Yeah, things were a lot different. Things were a lot different back in January for the Australian dollar, US dollar. If you remember back then, what was happening in the world, that US and China had just finished their phase one trade deal. We were going into a presidential election, and it looked like that the status quo was going to remain, and we were going to see global growth. Things today look entirely different, where we're facing enormous back effects from the lockdowns and the coronavirus, the severe hits across the board to trade. The price of oil is cut in half from where it was back here in January. Things look a lot unhealthier than they did back here. And that was best case scenario, though. That was best case scenario that we were looking at some growth for 2020. So here we are back, and things are entirely different. Doesn't mean it doesn't. Things don't have to make sense, though. We want to be aware of them. We want to put the pieces together. When you have the fundamentals and technicals aligned, like you do right now on Bitcoin, when you have the technicals and fundamentals aligned, that's when the biggest moves happen. Yeah. Well, I don't know. I don't think so. I think a lot of the bulls were not in the market. A lot of people could, a lot of people over here, even though they're bearish, don't believe that we're going to see a recovery. It doesn't mean that they're short the market. They're not short the market. They're just not long the market, right? There's a difference. There's a big difference. So I don't think I think the bears made a killing over here. And then I think a lot of bears, I don't think too many people are getting hurt. The fundamentals behind Bitcoin, taking away, because Bitcoin is an uncorrelated asset that trades with its own 4-year cycle, surrounded by the halving of the miner's reward, which just happened. It just happened over here in early May. Now, what's happening, though, outside of what's happening inside Bitcoin, which is the only thing that's important, and we'll briefly share on that in a second, but you also have the Fed increasing the monetary supply. You have Bitcoin tightening its monetary supply. It just tightened it a few weeks ago, the first week over here of May. The rest of the world is easing, right? Bitcoin is now slightly less scarce than gold, and in 4 years will be way more scarce than gold, and eventually will be more scarce than palladium. Bitcoin has its own monetary supply that's coded in. It's not some human going ahead and making these decisions. Bitcoin happens to be right now, at the exact moment it's beginning its bull market phase of the 4-year halving cycle. This generally lasts right around here. You could see where this this yellow orange dot becomes more yellow. You could see that play out over here. That's generally about anywhere between 33 and 31 months, right around that area to the next halving. And that's where the bull market phase of Bitcoin will begin until we get to about 15 months to the next halving. This is when Bitcoin will have a decline of about 85%. But we're here right now. We just started the red dot. Technically, Bitcoin is a stone throws away from breaking out of this upper trend line resistance over here, which goes back to the all-time highs, and the resistance here at 10,400. Once we get above there and break out of there, the bull market has begun. It is coinciding perfectly technically with the fundamentals. So Bitcoin, you could just buy a fraction of a Bitcoin, right? You could buy $1,000 worth of Bitcoin. You don't need to buy a whole Bitcoin. Yeah. So, but the Nasdaq didn't make new highs until a few days ago. So the NASDAQ didn't make new highs to a few days ago. So you're trying to like, you have to get this right in real time, not in hindsight. So, there was no way even going back, to the middle of May to know that the NASDAQ was going to make new all times. And that's why, maybe a week from now or 2 weeks from now, the Dow and the S&P are doing the same thing and making new all-time highs. No one's saying that's not a possibility. On the contrary, it's a real possibility. The move is strong. It has no signs of fading yet, right? And it's still going on. So who knows what's going to happen, right? But it doesn't mean that the economy is obviously clearly separated from the markets right now, that you could say. Yeah, right. If you bought, let's say you bought, $1,000 worth of Bitcoin, and let's say Bitcoin, as it goes 10x to $100,000, that $1,000 has made it 10x. It's now worth $10,000, right? And what happens is if Bitcoin, trades above like 225,000 and made it 20x, so that $1,000 is now $20,000. You need to think in percentage terms. Yeah, let's take a look over here right now at WTI crude oil. And, I'm looking over here on the daily, and it looks to me that this slow grind upwards could continue, right? It could continue. No question about it. Is it the time to go ahead and short oil? Because oil is in a bear market. And this has been a rally in a bear market. Is now the time. I mean, you can make it just really easier on yourself. And instead of trying to go ahead and pick the top, because this could be breaking down right now. This could be breaking down right now. And this could be your really strong time to sell. But there's really no way of knowing which of these was the time, to go ahead and take that position. As this trend starts rolling over, if you're looking at this as this is the really bear market over here, and now price is pulling away from that. As this rolls over again, then you could start looking to get short oil and ride the momentum on the wave down. Yeah, it's hard. I mean, do you ever listen to anything an investment bank says? I don't see the Federal Reserve buying Bitcoin at any time. I think that the Federal Reserve is definitely going to do whatever they can to maintain the U.S. dollar reserve fractional debt-based system. It could for as long as it can. So that means that Bitcoin is actually a competitor. All right, let's take a little bit of a look around. Dollar still under pressure. The move by the euro has been surprising. This is the most important thing that I could figure out what's going on today. You're seeing the US dollar stronger than all commodity currencies, specifically the New Zealand dollar, the Australian dollar, the Canadian dollar. You're seeing it very strong also versus the Mexican peso, all commodity currencies. However, Canadian dollar, but also you're seeing it's also stronger than the pound. But you're seeing the euro, the Japanese yen, and the Swiss franc stronger than the dollar. Tomorrow's FOMC is a big deal. We need to put all the pieces together, figure out what they're hinting at, what their next moves are, and how the market is going to position for it. These are going to be positions that are going to lead to trending markets. Trending markets are the opportunity where we can make some good money. We need to really be on our game right now, getting into the next 36 hours. Mark Mellon, thanks for the support over there. Thanks to anyone who's got ahead and take the time to hit that like button. That is definitely appreciated. It really does help the algorithm know that people enjoy this channel. It lets me know that you enjoy what's being shared here with you. And it makes it more fun for me if I know that you also appreciate it as much as I do. Is the Bitcoin bull market everyone waits, a bit like waiting for the promised land? Maybe for people who don't understand it and wish they were involved in it. But there's a lot of people who don't believe in Bitcoin. There's a lot of people shorting Bitcoin right now, and that's what makes a market a market. The same thing that's happened forever since gold. I remember back in 2008 talking to my roommates about gold, and they were like, why would I want to own gold? So, some people will never get it. And that's all that's happening with Bitcoin. Isan, thanks so much, brother. I appreciate that. We made it past 500. That's pretty awesome. So that's a really good comment over here. We have everyone is being Japanified right now. Does it mean that no one is Japanified anymore? And that's why we're interested in the US dollar Japanese yen trade as it technically goes on to break out, if it goes on to break out. And the first indication is this 5-year trend line. It's having trouble making the breakout. It's been rejected 1, 2, now 3 times. Right? That's why we moved this 109.71 line, the line in the sand, the only blue line you see on any chart, because that is the line above it. You got to be long, is because what happens if Japan is actually the first one to be Japanified? What happens is if it's the first one out, what happens if the yen just basically loses an enormous amount of value, right? That's why if technically the US dollar starts breaking out versus the yen, we just want to be involved in the trade. And again, that's a position trade. That's a trade that could have some lasting consequences. So markets are ever evolving, right? Everyone else is being Japanified. Is Japanified who is the first? Is they going to be the first ones out? That's what we need to be watching. That's a great quote. Thank you for sharing that today. A lot of people definitely do not understand that. They believe that, if you're not involved in a certain move, therefore you're wrong and don't know what you're doing. You're not going to get very far like that. So that, Joe, that's a pretty good gain going from, 4 to 5. That's a pretty good gain over there. That's 10%, right? Kind of build more. It'll generally last more or less than, to December of 2021. And, it's not to try to time the top. Don't have the mindset that you're going to get the top tick or anything like that. But you could see over here, you could see this is about 31 months. You could see as this colors start to change to the yellow. So be over here, wouldn't be at the top. Maybe this was, I don't know what the price was, but I'm going to say maybe it was around, 13,000 Bitcoin, right? So you're not going to try to time the top. You just want to get out near the top month around there. And the same thing with getting back in, 15 months to the halving, the dark green dot, last 2 halving cycles. That's a pretty good area to be starting to accumulate Bitcoin for the next bull run. Planning on selling my house and shorting the S&P. I don't know. Maybe selling the house, holding Bitcoin and trading. Yes, that's a good way to go. I hold Bitcoin and trade currencies mostly. So there's a question too, though. There are some people who think that, and maybe they're right, that we're going to see 4,000 on the S&P 500 next. I don't think any one of us be surprised. But if that's the case, and if that's the trade you believed in, then maybe you'd want to be long the S&P while holding the account in Bitcoin. That's a trade to think about. I prefer trading the currency cross pairs on a swing traders time frame and holding Bitcoin. Yeah, Casey, absolutely. Yeah, Tom. Yeah, through the grayscale GBTC is a ticker. You pay a premium. You pay a 2% yearly fee, and then on top of that, you're paying a premium. But it's kind of worth it as a play in Bitcoin within the equity markets, right? If you have something like a Roth IRA, it becomes very attractive. Yeah. Wall Street bets. I've heard about that. I've never visited it, but that's where people go all in on trades, right? That's like, taking out some crazy call options on Hertz or something like that are way out of the money. You know, if you hit it big, you hit it big, but you're going to lose. That's the whole thing. That's not what trading's about. So this is a we'll talk about it. It's really important about what I think of our XRP, and I have a lot of a lot of friends that are invested in Ripple, because you're not really invested in XRP, you're invested in the company Ripple, and the company Ripple owns an enormous amount of market share of XRP. They own billions and billions of them, right? And they continuously sell them to retail investors in order to continue to fund their operations. So when you got a company that owns the highest proportion by a large scale of the token, and then that company's business model is to continually sell that supply to retail investors, it's probably not the best investment that you could be looking to make. Whereas the alternative is Bitcoin, where there is no company who owns any portion of the supply. They're not selling it to fund the company, and actually the monetary supply gets tighter, not looser. So that's what I think of XRP. It could definitely rip upwards, and you've seen it happen. Look at this move. This move is ruthless and relentless. That's almost an 80% gain over here, and you are going to see many of those during the next bull market. You're going to see many rips on Ripple. I have no idea how high it could get. I don't know if this thing trades above $1 or not, or three. I have no idea, but I do know that you are holding an asset that the company is unloading to you. I don't know if BlockFi is safe or not. It's a good question, William. I don't know how sustainable their business model is. I'm interested to know, as far as your Bitcoin being safe on their site. As long as you used proper security and precautions, including whitelisting and address, you should be probably pretty safe. You have to have full on control upon your operation security. But long term, is their business model sustainable? I have my doubts, and it doesn't mean that I'm not using them, but I have my doubts about whether or not long term, like how are they paying such high interest rates, 8% on the stable dollar coins, and they're paying 6% on Bitcoin. I don't know how that works out. I know they have a lot of VC money. I know they have Gemini, Coinbase. They got the boys at Morgan Creek, all as investors, and they got a lot of VC money, but I don't know how sustainable it is. Kraken's actually a little difficult to buy. I have to remove this. I'll remove this today. Kraken is a good place to buy Bitcoin, but it is actually become quite complicated and taking a long time to get KYC'd. I do think it's much better buying Bitcoin through BlockFi. That was an easy process of just getting KYC'd, within 12 hours, and then just making a wire. It was one wire payment. It was very easy and seamless. And then you could transfer it out of BlockFi into your hardware wallet. Vider, thanks so much. I mean, worse than it. Yeah, it acts like a central bank. It acts like Ripple acts a bit like a central bank then, and yeah, in the sense that it's just basically diluting the currency. In this case, though, they're just dumping more of the supply onto the retail. Yeah, exactly like a central bank. It's not something that you want to be invested in. Now, is it something that if you were a speculator, if you had $1,000 to your name and you wanted to make an all-in bet, what do you put that on Ripple? And if Ripple goes to $3, did you make good? Yeah, that's all a possibility, but wouldn't it make more sense to put that money on Bitcoin, which is the safer, higher probability bet, right? Is it possible that Ripple outperforms Bitcoin? Let's look at a chart. That looks pretty bad. But look up here. Look, during when Ripple went to 3. This is when Bitcoin was trading at all-time highs and Ripple just crushed Bitcoin. But that was that only brief moment in history where that has happened. And then you have these, let's call them Ripple spikes. Ripple spikes, because this is how they could just rip it in your face. They control the supply. They could rip it in your face. And that's why you can't short this thing. Look at this rip. I call it the ripples. You ever see a market rip like that anywhere else? I haven't. This is straight up walls, right? What is American Ninja Warrior? The wall of whatever. This is those walls. And that's going to happen again. You're going to see those moves up for sure. So you can't really short it, or I wouldn't, right? Even though it just continually loses value versus Bitcoin. Yeah, Mark, I agree with you. Kraken has become definitely a little bit of a pain to jump through all the holes. Dollar off its lows barely right now, or no, not even. Dollar is pushing on the lows right now. Euro definitely put in a nice session. This is tomorrow. The markets are all about what happens tomorrow, and we're going to be able to talk through it together as it unfolds. Maybe we'll go live tomorrow for the Fed announcement and press conference. We'll see. I want to be able to take it all in myself. So we'll play it by ear tomorrow morning. We'll talk about it. Yeah. But I mean, you just know your risks with BlockFi, Nick, and the risk with BlockFi, you're trusting a third party. Make sure you have good operation security, including using two-factor authentication and also having a whitelisted address. So God forbid you let any passwords or anything go and people got into your account, or people SIM swamped you, that you will not lose any money. But you just always got to use safe practices. When you're in charge of your own money, you're in charge of your own money. So you got to spend the time looking up and researching what to do. So Coinbase has become pretty bad. You have to think of them as the Facebook of crypto. And just as Facebook tracks everything you do, whether you're using Facebook or not, it's the same thing with Coinbase. And it's just a question of privacy, and it's a question of freedom. That's all. All right, everyone. I look forward to tomorrow. I hope you all have a wonderful day. I know I enjoyed this session, and I thank you for being here with me. Thank you for the extraordinary amount of thumbs up today. We had over 500, and there's only about 1,000 people in here. That's a really high ratio. I appreciate that. That's my goal, is to kind of wean out the excess noise and get the group consolidated to where it's, a good group of people that we could go ahead here and navigate the markets together. I hope you all have a beautiful day. Look forward to this afternoon's S&P, probably where I'll talk a little bit more about where, at what levels, and when I would be looking to short it. And then also right now where I'm looking to step in and buy that dip to go long. All right, everyone. That's it for today. I appreciate you all, and I thank you all. I'll talk to you tomorrow.